Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Meghan Grebner. With us is University of Missouri livestock analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
We have a lot to talk about this week. Let's get into it right away and talk a little bit of a week in review in the livestock and what are some of the things that have been going on this week?
Well, I think when you look at cash hog prices, we're down about $1 relative to a week ago. On the fed cattle side, it's been a pretty light week of trade, but maybe a little bit of strength, and it's been a while since we've been able to talk about some positive news on the fed cattle side. So we are maybe getting a little push there. Feeder cattle started the week a little lower, but I think we've ended steady to $4 higher as we've gone through the week. So a little bit more positive news on that front. Pork cutout was up a little bit for the week. We lost a little on the choice beef cutout, but again, maybe not as dismal as the last couple of weeks have been when we've had these conversations.
On a very rainy day here in Indiana, it's nice to have a little bit of sunshine because we've not had anything positive to talk about really in the last couple of weeks.
That's correct.
USDA released a couple of reports this week. Let's start first, final estimates and how that relates to the hog market and some of the things maybe that we need to look at there.
Yeah, absolutely. So, we do get these revisions that come back and look at the last 5 years and try to look at relative to the initial estimates where we come out on different categories of all these livestock components. I think we can focus for a minute on pig crop whenever we look at these final estimates. And I start back by saying, this week we're going to have slaughtered somewhere north of 2.3 million head of hogs. That's up about 3% relative to a year ago. So we are seeing growing supplies. And when you look at that relative to what hogs and pigs would have suggested, that's another percent higher. We would have suggested about 2% higher looking at the hogs and pigs report. So I then back up to that final estimates report. If you look at where pig crop revisions were in both 2014 and 2015, those are also have been revised higher, and in some cases over 2 million head higher. It just goes to tell you that we have been, and I say USDA appears to have been underestimating pig crop. And for me, that's a little troublesome as we get to the latter part of 2016 here, in that we have growing hog supplies. And if we continue to run above what hogs and pigs reports would be suggesting as we get in that last quarter of 2016, we can see a lot more price weakness. So some concern there, and final estimates only goes to show that that's a trend that's been happening for the last couple of years as well.
And Scott, we've been talking a lot about that pressure on the shackle space with limited, and we're getting closer and closer to the end of the year. How nervous should we be when it comes to hog prices to round out 2016?
I think one has to be very careful about where we go in this last quarter. And you get an economist trying to get us to commit one way or the other, gets a little hard at times, but I'll say that's going to be a head of a pin that we have to deal with. It's that when we have one hog too many, that it becomes a pretty tough situation. And so we can go and become pretty negative in this last quarter of 2016 pretty quickly. Now, I will say, if we have large runs for 3 or 4 or 5 weeks where we have pretty large Saturday kills, we can probably deal with that. But if you start talking 7, 8 weeks in a row, the longer that goes, the tougher it gets for us. So tough to call, but I am worried about the downside risk in hog prices as we get in that very latter part of 2016.
And we talk about securing inputs and maybe mitigating some of that risk, and we'll get into that here in a little bit. Let's talk a little bit on the cattle side of things. As we look at prices and some of those issues, are we seeing a better trend for our cattle producers at this point?
Well, so maybe, Meghan, prices have certainly come down substantially as we've gone through 2016, and a lot more questions are coming now that we can talk about, hey, do I want to put these fall calves and let somebody else own them quickly? Do I want to hold them through the winter? There's a lot of conversation going on right now, and I will continue to remind us, although cattle prices have come down significantly, they're still well above where we were 5, 6, 7 years ago. So we don't want to forget that there's more downside risk. I guess as I look at these markets and I get this question all the time about, hey, do I want to let these calves go now or keep them? I still think there's downside risk there. So if I was going to try to hold on to animals and maybe winter them before sending them to the feed yard, I'd certainly want to do some type of price risk management on those calves, at least a portion of them, just given I think there is some downside risk.
How do we make that decision to decide whether to keep them and take a hit or get rid of them now and also potentially take a hit? Where is that balance of risk?
Well, I really think you have to look at your individual production cost of, what's it take for me if I want to winter those calves? Do I have enough available hay, pasture, et cetera, to make it through the winter? Or am I going to have to buy inputs to get those calves through the winter? I think this idea of holding and hoping cattle prices go higher is a dangerous strategy, given that markets have been pretty negative of late. But knowing your cost relative to others is always going to be very important to that. Beyond that, I'll say, what risk can you afford to take? If you can't afford a lot of risk, holding cattle, putting another 100 pounds on or another 200 pounds on comes at risk in these markets today. And if you can stay in some market risk, there might be some payoff, because I keep saying I believe that the fundamentals would maybe give us a little strength as we go through the last part of 2016 here, but markets certainly haven't shown that to date. So I think those are the things that we need to be focused on in terms of whether or not you want to hold or sell today, is really what you can put that additional weight on, and then are you going to be comfortable using risk management tools or some sort of risk management tool to try to help you on the price side as well.
We talk about some pressure on cattle prices. Announcement this week that fresh beef from Brazil has received import approval. What does that do for our nation's beef producers at a time when we don't necessarily need more beef on the market?
Yeah, so I certainly think if we see fresh beef flowing from Brazil into the United States, there's probably some drag on U.S. prices that otherwise we wouldn't see. I certainly don't want to overstate the impact of that, because I don't think we're going to talk about a substantial increase in the quantity of beef that comes into the United States. But every pound matters right now when we talk about beef production that's been up nearly 4% year to date. And so additional supplies of beef is not exactly what we want on the market, yet we may get to deal with them. I know there are a lot of other issues with importing fresh beef from Brazil into the United States. If that creates some other issues for us, then absolutely, it could be troubling. But again, I think are holding the Brazilians to the same standard that we hold our own processing plants here in this country. So it's hard not to allow that to occur over time, especially when you talk about trade with all of these other countries, and we want additional access in other countries. We have to give access to those that meet our level of safety as well.
And it needs to be a level playing field for everybody when it comes to that trade game.
Absolutely. I mean, we want everyone else to play in the same way that we play in that trade game. We want that playing field to be as level as possible. And so we certainly have to step up to the plate and say, as long as these other countries meet our requirements, it's pretty hard for us to say, well, we don't want to allow you to import product, when we want to turn around in markets and say, hey, make sure that you're providing us the correct access, because we're certainly meeting your safety or quality issues that you're asking for.
Let's talk a little bit. The USDA released the WASDE report this week and updated numbers on both corn and soybean yields. As we look at that information as a livestock producer, how do we use that to mitigate risk and to maybe play into our risk management plan?
Yeah, well, so number one, I'll say we got some revisions out of the WASDE report on terms of yields. Number one, soybean yields up almost 2 bushels relative to the previous month's report. Corn down a little less than a bushel according to USDA. I think the corn number actually surprised folks staying quite as high as it did. But I like to remind us, it's been nothing but kind of negative news on the corn and soybean meal side of the equation, and probably have kept a lot of livestock producers on the sidelines in terms of risk management. Well, I'm not saying that prices can't go lower for feedstuffs, but they're a lot lower than we've seen for a long period of time. Again, perhaps a marketing strategy that gets a portion of those feed needs locked in for the next few months might be in order, especially if the crop were to shrink relative to what USDA has been saying. I think it wouldn't take much for us to see a pretty good jump in feed costs. And we can't afford that in either cattle or hogs today, just given how close the margins are in both cases.
We've talked for several weeks in a row that's been the input costs or the feed costs have been what has kept producers in the black this year.
Absolutely. And I just say, don't become complacent. Even though we've seen this continued downward movement, don't become complacent and depend on cash markets to take care of where you are, even though we're at pretty low prices today. I again, don't think we can stand much of an increase in feed costs without it really turning what was a very minor black ink, especially in, let's say, the hog market, into something that looks a lot like a lot of red.
Scott, to finish up today, let's talk a little bit on the retail side of things. Retail beef prices came out. What do we take from that, and how does that come back on our side of things when we're looking at profits and costs?
Yeah, so I think, beef retail prices are the ones where we've seen maybe some of the largest declines as we look at the August data that we got out. I sometimes like to remind us that the all fresh beef price reached a peak of $6.41 a pound, and is now sitting with the August report at $5.92. So we've almost seen a 50-cent decline from its high. Now, you can look in percentage terms, especially as a cattle producer, and say there's something wrong here, right? Because retail beef prices down only 5%. Yet when you think about what's been happening to live cattle prices down 25 or 30%, we worry that there's not the same retail and farms movement that's been occurring. Now, I'll say, don't forget, retail prices didn't go up as much in percentage terms as cattle prices did when we were on the upside. But I will continue to say lower beef prices has to be helpful for us, at the case. I think consumers will have a tendency to buy more beef, all else equal, as we keep those prices lower. So there is some hope, I guess, or help coming in that lower beef prices for consumers ultimately increases consumption.
So hoping that we see more consumer demand at the storefront.
Yeah, that's right. And I don't want to overstate any of that demand side, because we're pushing a lot of product out there, but anything we can get is certainly positive. I would say on the beef side, the other thing that I think we've been noticing of late, so that choice select spread's really narrowed. It tells me that some of the higher quality beef products have been moving down more than what we see from the select side. I don't know if that's some consumers being willing to buy down of late or what exactly is going on, but it wasn't a couple months ago we were talking about a record choice select spread, or record relative to a number of years, and now we've narrowed that back down to about $6 or $7 again. That's been a large change, and something that we need to be paying attention to when we look at that consumer demand side.
Not all good news this week, but definitely much more than we've had to talk about the last couple of weeks. Anything else to wrap up today, Scott?
I think we're just going to have to continue to work with a lot of supplies of beef and pork as we get through the remainder of 2016. And I know more supplies makes for more pressure on prices, but hopefully a little demand strength can help us as we finish up the year here.
All right, Scott, have a great week. To have our weekly livestock market update delivered directly to your mailbox, visit our website, brownfieldagnews.com, and click subscribe. I'm Meghan Grebner on Brownfield.